Hi guys, thank you very much for joining. I'm Cristala, I'm the marketing manager at Ironfx, and I'll be hosting this live session for the day with you. So let's go through the agenda of the day. Today we'll have Alvaro, our regional manager of LATAM, discussing the fundamental analysis of the day. Then we'll have our account manager, Nicolina, taking you through some very key sections of the client portal, and then the week ahead analysis by our senior research analyst, Peter. So that's it. Let's get started. Thank you.
Good afternoon, everybody. Welcome from Ironfx headquarters here in the beautiful island of Cyprus and Limassol. Today, my name is Álvaro Marinho. I'll be here instead of Peter. Joseph, let's go and take a quick go around quickly what happened in the markets. It's Friday, so don't disturb and bore you too much with heavy stuff. So let's start. The shares rose yesterday, and the dollar was lower. Means that the day after the minutes from the United States Federal Reserve's May meeting indicated the central bank could remain flexible and might pause rate hikes later in this year. Wall Street closed higher with the three main U.S. indices positioned for their biggest weekly gains again since middle March, more or less. So the MSCI's benchmark for global stocks was up 1.54%. Europe's pan-regional stock 600 equity benchmark index rose 0.78%, while the MSCI's broadest index for Asia-Pacific shares outside Japan fell slowly 0.02%. The Dow Jones Industrial also rose 516.91 points, means 1.61%, and is now closed yesterday on the value of 32,637.19. SP 500 gained also 79 points to 4,057.84, and the Nasdaq added 305 points, nearly 306 points to their value, fixed in 11,740 and 65 points. It was a great day yesterday in the stock markets after last week's falling while. Analysts of Bank of America, they said the Fed could pause its tightening in September if the economy deteriorates. Okay, data on Thursday showed the number of Americans filing new claims for unemployment benefits fell more than expected last week as the labor market remained tight, even when we saw a separate report confirming that the U.S. economy contracted in the first quarter. Now let's go to the forex, the currencies. The U.S. dollar fell 0.284% against a basket of global currencies. Overall, the Fed gets less aggressive on tightening. That would weaken the greenback's safe haven buyers appeal. The euro was up and against the dollar and fixed the 1.0727. I'm sorry. The Treasury yields hedged up after the benchmark 10-year note hit a 6-week low with signs of slower economic growth, reducing inflation fears. They rose 2.74% after falling to 2.70% early in the session. In the commodities, the Brent, that's the reference for European prices, the futures rose $3.37, settle now at $117 per barrel, while the WTI, the US Texas intermediate crude, rose $3.76 and closed yesterday the session on $114.09. Gold futures were up a bit also. They were the US gold futures, they were around $1,850 per ounce. In Asia, the Chinese blue chips reversed earlier losses to rise 0.25% after struggling a bit to find a direction for most of the session as investors fretted over signs of a slowdown, but took comfort in comments from Premier Lee on stabilizing the allying economy. Okay, South Korea's central bank raised a bit interest rates for the second consecutive meeting. Okay, and they try to tackle a bit the inflation there that is in the 13-year high. All right, the dollar, get back to the dollar. Yeah, the dollar sank to a 1-month low versus the major peers, because the traders lowered the Federal Reserve rate hike expectations and signs that the bank is like in the middle of in the limbo, or we raise or we damage the economy or vice versa. So they must create a kind of a balance in order to not to hurt too much the common and the normal economy, while they need to control the inflation as much as they can. Against the euro, the currency also slipped the weakest since April 25th. Got to 1.0765 yesterday and dropped to the lowest against the sterling pound since April 26. They reached yesterday the level against the GBP of 1.2607. The Australian dollar rallied 0.5%, is now at 0.71 against the dollar, and the New Zealand jumped also almost the same, fixing now at 0.65. The dollar index is headed for a 1.5% drop only this week, adding the 1.37, 1.40 slide of the previous week. So should be 2-week decline. Let's see how it's going to happen, because we don't see this in the US index since the turn of the year. Going to the energies now, and there is a huge problem that is literally consuming everybody now a bit across the world, is geopolitics, the crisis and the wars that are going around the world, and lots of powers involved in this. And the people are feeling, the economies are feeling, I can feel in my pocket, everybody can feel right now what is going on. And let's try to dismantle and disconstruct a bit the reason why these kind of things are happening right now. Let's go for the gas prices. The gas prices are in the all-time levels. Energy security becomes a top priority for importers because the forecast of the tight gas supplies and the volatility in the prices in the next few years are keeping buyers on the hedge and impeding the push towards the decarbonization. This also not only affects our pockets, the economies, but also the climate and the climate targets that lots of countries agreed to achieve. Europe is importing record volumes of liquefied natural gas, the LNG gas, mostly from the top supplier, that is Russia, or through Russia or Ukraine. And this supply has been restricted since the crisis happened like almost 3 months ago. That drove the prices in Europe and in Asia to all-time highs earlier this year, and put inflationary pressure on everything, because if the fuels and the combustibles, the energy prices goes up, almost everything must go up too, okay? The geopolitics make it very unstable, and it's incredible, especially in Europe, the high dependence that the old continent has on this commodity, especially buying it and transporting it for the channels of the countries that right now are in the middle of the war. Also, China, that is the world top LNG importer last year, relies on imports to meet nearly half its gas needs. But its imports are forecast to shrink this year as the world's top energy consumer turns to cheaper coal. That is another issue. Not only China, but also India, they're turning back again to the coal with all the climate consequences we have there, okay? The natural gas has been a big driver of this inflation, of course, and the prices are accelerating. Heating and cooling prices is getting skyrocketing. And the gas is not only needed for the winter to warm, to heat, but also we need gas to cool in the summer. So basically, we are fully dependable of this commodity. And not also the gas is a big important component in the cost of the production. So electricity, fertilizers, plastics, cements, steels, glass, lots, and basically everything that we are touching in a daily basis somehow has the high connection dependency on this kind of the commodity. In the United States, the gas inventories ended last week 1.5% lower. Okay, this is a sign also that something is going up there. They went lower than the 5-year average, means that the energy consumption is rising, maybe not because of the dynamics of the economy, but because of the most usage of the reserves. The deficit of stored gas grew during the week because of a smaller than normal build of stockpiles. The inventories have been withheld down by strong demand for liquefied natural gas, the LNG, among European buyers, replacing Russian gas, and domestic drillers who have been slowly increasing the production despite the highest prices in these years. The US gas output has rebounded from the lockdown lows, but hasn't kept up with demand because of shortages of roughnecks and rigs, limited plant capacity in some regions, and executive compensation plans that these days encourage profitability over production growth. The electric bills, well, I guess everybody that are listen to me can corroborate that the electricity bills have soared and are likely to move higher as households break out with the usage of the air conditions. Today, also, 5 things that you need to know. Putin exports demands. Russian President Vladimir Putin said he's willing to facilitate grain and fertilizer exports as global concern mounts about food shortages and rising prices, but only if sanctions on his country are lifted. He didn't specify exactly what he was referring to, Russian exports or those from Ukraine that have been stopped at most blockage in the Dark Sea, but in the Black Sea. But something is going to happen. It can be an exchange coin regarding to relieve some sanctions and allowing to cereals and some essential things to leave the ports and to start to fill up the market that is in need of these goods, especially in third world countries that are poor countries, like especially in Africa, that with this the severe climate over there does not allow them to be a big grain producers. Now put on top there is no grain too important to arrive to these countries. You can face in a short period a very, 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 very complicated situation over there. Also to know Apple revolts. Yeah, who would imagine that violent clashes because of the infections mounting in the factory floors in China, Apple factories, the turmoil was engulfed by tens of thousands of workers in an Apple supplier in Shanghai. It was a really, really, really not beautiful thing to see, because the bosses of that companies, they obligated the governments to put the people confined, but not in their homes, but confined in the factories, so the production could not stop. Literally during 2 months is already the situation, and some clashes start to happening there, especially they are well noted, especially when you talk about a name of like Apple. Okay, UK trade deal. That's very interesting thing. Is the UK signed its first trade deal with a US state amid warnings that the Prime Minister Boris Johnson stance on Brexit is hindering progress on a broader deal with Joe Biden's admin. The British government said its agreement with Indiana state will help remove barriers to trade and investment, improve procurement process, and pave the way for professional qualifications to be recognized in both countries, let's say, or the state of Indiana and the UK. It expects to secure about 6 trade deals with different US states by the end of the year. The UK government also announced the first probes into deals under a new national security law later this week. And British Premier said it will look again as it plans in the UK after the announcement of 25% full tax on oil and gas companies to support Britain's facing a record squeeze on living standards. It's very interesting that now some states in the United States of America start to make bilateral agreements with UK, and UK goes on this and not doing directly with the federal and central administration in Washington. Okay, let's see how it goes. Other thing that we must take a look is the Russian debt. The investors are supposed to receive about $100 million of Russian foreign debt in their accounts by Friday. payments President Vladimir Putin government says they were already made. That's unlikely to satiate concerned bondholders who are itching to see the cash after the U.S. Treasury closed the loophole that previously allowed American banks and individuals to accept such payments. So it could be interesting to see how the behavior of the Russian debt, the repayments, are going to be performed until the end of this year with all this situation. Okay. Another thing, the fourth thing that should be interesting to pay attention is in the stress that the Joe Biden's administration is making now with the Chinese government, especially with the declarations of the U.S. Secretary of State yesterday, that sound very, according to the Chinese authorities, were outrageous and not admissible, coming from a friendly nation like the United States. Among the declarations was accusing China of being a dictatorship, not respecting the human rights, and so on, so on. The same conversation we are used to hear, but now on the high level of the Biden's administration. Let's see how it goes. Joe Biden even threatened to military intervention in case China touches in Taiwan. So I guess this is getting nuts. So it's not enough to what is going on now here in Europe with Russia and Ukraine. Now somebody start to destabilize the China and the Asia. No, let's see what's coming last. And last but not least, the good thing that you need to know also is that is the weekend. I'll be here again on Monday. Also, then the guru Peter will come. And that's it, guys, for me. Now, let's go for a Q&A session. If you want to ask something, let us know. Okay, I'm here to answer your questions. If not, we make a short break and go back to Nicolina. All right, see you on Monday. Ironfxers all over the world. Nice to meet you. See you on Monday. Bye, guys.
Hello, everyone. My name is Nicolina, and I am one of the account managers here in Ironfx. So today with me, we're gonna see how an existential client can activate his or her account and start his or her trading adventure with us. So today, we're gonna see how we upload our documents, how we deposit, how we withdraw, how we transfer money, declare bonuses, ask for swap fee accounts, etc. So here is our portal. First of all, depending on your nationality in your country, you have to choose your language, the language that you prefer to be the more easier for you to start your trading and navigate through our portal. So here we have the dashboard. The dashboard actually shows you the type of your account and how to upload your documents, how to deposit and withdraw with great facilities. First of all, you have the deposit button, the withdrawal button. Next, you have the type account. For example, here is a test account to show you guys how it works. For example, this is a live floating spread account. This is the number of your account, your account balance. After you have your MT4 password, if you forget your password, there's no problem. This is not the end of the world. You just tap on reset password, and then you have the opportunity to change your password. This is your account status. Here is on read only. Read only means that you cannot use this account for trading because you have not yet uploaded your documents or made your first deposit. This is the bonus scheme. We offer 3 types of bonuses. For example, here you have the 40% power bonus. We have another 2 bonuses, which is the 20% iron bonus and the 100% sharing bonus. The trading platform, which is our MetaTrader 4, we're going to see afterwards how you can download your MT4 and connect to start trading. Your server and your leverage. Here you have the deposit button. If you want to deposit and fund your account in order to start trading, you just tap on this button. Here you see the deposit methods that we offer. First of all, there is credit debit cards, China Union Pay, FSCA, digital assets, Neteller and Skrill, which is the e-wallet, the local agent, the Ironfx Card, the Bit Wallet, the bank transfer, perfect money, and open banking. Okay, hello again, guys. Sorry for that. We had some technical issues, so I am back with you. We're about to say that we're going to discuss about the deposit methods again, because it was cut before. Like now, deposit methods we have, as I said before, credit debit cards, China Union Pay, FSCA, digital assets, Neteller and Skrill, which is e-wallet, the local agent, the Ironfx Card deposit, Bit Wallet, bank transfer, perfect money, and open banking. Make sure you register with your correct country of origin because the deposit and withdrawal methods differ from for each country of origin. Next, of course, the trader wants to withdraw his money and his benefits, of course. In our company, we have a policy. The trader needs to use the same withdrawal method as the method he deposited with. For example, if you deposit, like if you do your initial deposit of, let's say an example of 500 euros via credit card, you need to withdraw these 500 euros with credit card. And for the benefits, You can use Neteller or Skrill for small amounts, and your bank transfer for bigger amounts. Next, we have our internal transfer. For example, if you by mistake deposit in a wrong account like in the same profile, you can open many accounts and you deposited by mistake on the wrong account. This is again not the end of the world. You can just very easily type here your account number, deposit account to, right? Select the account that you want the money to be transferred. And then here you click the deposit amount and then you click on submit, and your request can be done in a few seconds. At the same time, while making your first deposit, of course, a trader needs to upload the documents in order to fully verify the account. In order to upload your documents, you type here, My Documents. No documents uploaded. Please upload your documents here. You tap on here. You can now deposit as a registered client, register account. After that, you need to verify your identity. For identity, we accept an identity card, a passport, or a driving license. Simple as that. You click on document type, and then you can upload the file from your PC or from your phone as a photo or as a PDF file. Here you can see some examples. And then you need to verify your address. Verify address by uploading a utility bill, a bank statement, a waterproof, etc., etc. Then when you finally upload your documents and when you do your first deposit, you can click, for example, here, trading requests. And here you have some options for your trading account. For example, here, you can declare your bonus. You have opened, for example, an account with a power bonus. You go there, you tap your account number, then you just click on this little square. I declare that I have read, fully understood the entire text of the bonus terms and conditions, and then you tap on submit. Then it will take you a few minutes until our support and funding department view your request, and the bonus will be added shortly on your account. Some of you may want to take a break for your trading adventure. For example, if you go on vacation and you will be absent for trading, let's say 1 month, the account automatically turns to archived. So archived means you haven't used your account for many days. So we're gonna ask you to restore your trading account. This is a very simple procedure. Again, you tap on restore trading account. Here you will have your account. You just click again on your you just tap your account number and you just click on submit. Some of our clients, due to religion, may ask for a swap free. Swap free is already known as Islamic account, and it's suitable for all our clients that are from Muslim faith. It means that up to 10 days, when your swap free request is approved, you will have a swap free. So no swaps for your trading account. For example, another procedure is that by mistake you do deposits and withdrawals. Like, for example, you just tap on the wrong amount, you just proceeded with the deposit with the wrong amount, or did a withdrawal that in the end you don't want to, you just tap on history. You have here transactions history. You have all deposits, withdrawals, and internal transfers. You just tap here on account. You select, for example, your account number, date from, you choose a date, day 2, you choose again the date, you need to make your request, then you just, for example, if it comes on deposit, if it comes on withdrawal, or if it comes to internal transfer, you choose your little box respectively. For example, deposits, next you have withdrawals, next you have internal transfers, and you tap on cancel. If you want to cancel a deposit or withdrawal or an internal transfer that has been done by mistake. After you have the partners, here you can see, for example, if you want to be a partner with us, if you are interested on the program of affiliation or IB, you can have here, you have here the option of access control, reports, and open new account. The most important thing, though, to start trading with us is this, our trading platform. The trading platform, many clients ask if you can download the trading platform from the App Store or from the Play Store for Androids respectively. The answer is no. You need to download the trading platform from our portal. Like here you have MT4. This is the name of our platform. And here you have the options of the platforms offered respectively to clients. It depends on what you're using. For example, Windows, MacBook, iPhone, Android, etc. Here we have MT4 for standard and advanced Windows, MT4 for standard, advanced for MacBooks, WebTrader, MT4 multi-terminal, MT4 PMAM, MT4 for Android tablet or phone, MT4 for iPhone, MT4 for iPads, and MT4 for Windows Mobile Trader. Here, if you are interested to become a trade copier to open a master account, or if you are interested to follow a trader or an influencer, here is the trading copier. You can have access on the trade copier platform or the leaderboard, depends on what you are applying for. Here is open strategy follower account, if you want to follow a copy trader, or here is the open trade strategy provider account, if you want to be the person who others will follow. Next, you have the Ironfx Cards. So remember, I showed you on the deposit and withdrawal procedures options, how you can use an Ironfx card. The Ironfx card is a MasterCard that we offer you as a company in order to use it for deposit and withdraw in our company. And of course, you can use it around the world for your shopping, for ATM transactions, and all this stuff. Here you see about Ironfx Card. What is it exactly? Then the most asked question, am I eligible for an Ironfx Card? What are the fees? For example, here you have the transaction type. Here you see all the options. You can use the Ironfx MasterCard, ATM cash withdrawals. You have a 2% of fee. For example, if you use dollars as base currency, you have $3 fee, and here is euro. Minimum fee is 2.50 euros. Point of sale purchases, as I say, to when you want to use your card for shopping, then the fees are for free. You don't pay any fees, of course. Non-financial transactions decline, ATM balance, inquiry, incorrect PIN. The fee is just 40 cents. Monthly cards, admin fee charged after 12 months of no activity, 24 months of no activity. This is when you declare for the card, you took the card in your hands, but you never use it. Then you will have a small fee again. And you can also read the other fees respectively, like minimum balance. You have to charge your card with $10 or 10 euros respectively when you receive the credit card. Replacement of lost PIN, closing account, and delivery of PIN, remaining balance via check by courier, then it's 30 euros. For example, these 30 euros you need to pay for receiving the Ironfx card is the delivery fees. Online balance inquiry, statement request, and SMS transaction notification, then it's for free, of course. Then you have another most asked question: do I need to keep a minimum balance on the card? What is the limitations on the card, etc.? And if you scroll down, you see more frequently asked questions. For example, what is the ATM exchange rate when using the card to withdraw a different currency? Can the cards be used at any ATM? Can the PIN be changed through the ATM? Steps to be done in case the card is stolen or lost, and etc. Then you scroll up. Request an Ironfx card. Ironfx cards are offered for any deposit of 500 euros or dollars or Great Britain pounds, depends on the currency you use when you open your account. Here you make a request of Ironfx card. Here, as soon as you receive card, of course, you need to activate it. Here you write cards last 4 digital digits, activation code 4 digits, and you tap on submit in order to activate your account. Your card is connected to. You activate the card, you top up with 10 euros, as I said before, and then your card is ready for use. Here you have some tools. For example, MT4 indicators, forex feature ideas, market buzz, technical analysis, market insights, economic calendar, web TV, and trading calculators. This is when you are an existing trader, you start trading with us, you have already activated your account, and you need to note some news on the market. You need to have some trading signals or consider the economic calendar before start trading. Then this is the best tools to use before you open positions, you start selling and buying on the platform. After that, of course, if you are mistaken on the registration, if you have written wrong name, you miss something, or if you need to change your email or password on something, or any other details on your profile, you just check here. There is a button, My Profile. You tap on it, tap Update Profile. And here you have all your personal details. If you want to change, for example, your name or you have written a wrong date of birth, you just come here, update profile, date of birth. For example, you write your date of birth, the correct one. Then you go down, if you're mistaken, on home address, and you just tap on update. Of course, you need to verify your profile after uploading your documents and made your first deposit. You need to verify your profile. You need to check with our support department that your documents are fully approved and fully verified, and your deposit is correctly added in your account before downloading the MT4 platform and start opening positions and start trading with us. As soon as you upload your documents or made your first deposit, and you need to know if you are eligible to start trading, don't worry, the funding department will send you a confirmation email as soon as your deposit is approved, and the support department and back office department will send you an automated email that your documents have been approved and your account is ready to be used. Last but not least, here you have a small button. This is a small window to communicate with our support department via live chat. Here, welcome to Ironfx chat. This, you see, for example, the name of your agent. The agent who will be with you through all your chats to answer all your questions, to give you advices, etc., etc. You choose your country, you choose the language that you wished to be spoken, and you just tap on chat now. Of course, the support department is here for you via live chat, phone, or even email to answer all your questions and all your queries in terms of profile verification, deposit, withdrawals, trading activities, positions on the platform, etc. So thank you so much for being with us. I'm going to wish you to have a pleasant day and good luck with all your trades.
We are about to leave a rather turbulent week behind us, and we open a window to what next week has in store for the markets. On the monetary front, we highlight Bank of Canada's interest rate decision on Wednesday, which could create volatility for CAD pairs. As for financial releases, we make a start on Monday with Switzerland's COF indicator for May and Germany's preliminary HIC period for May as well. On Tuesday, we get from Japan the preliminary industrial output growth rate for April, China's NBS manufacturing PMI figure for May, Australia's building approvals growth rate for April, UK's nationwide house prices for May, France's and the Eurozone's preliminary HICP rates for May, Switzerland's and Canada's GDP rates for Q1, and the US Consumer Confidence Indicator for May. On Wednesday, we get Australia's GDP growth rate for Q1, China's Caixin manufacturing PMI figure for May, and the US ISM manufacturing PMI figure also for May. On Thursday, we get Australia's trade data for April, Switzerland's CPI rates for May, and from the US, they will note the release of the weekly initial jobless claims figure, as well as April's factory orders growth rate. Finally, on Friday, we highlight the release of the US employment report for May with its NFP figure, and note the release of Turkey's CPI rates for May. Finally, the US ISM non-manufacturing PMI figure for the same month. The USD seems about to end the week in the reds for a second week in a row. The release of the Fed's meeting minutes on Wednesday tended to provide some support for the US dollar, as the bank seems to remain determined to curb inflationary pressures in the US economy. Despite some opinions for a faster pace regarding the rate hike path of the Fed, we tend to maintain the view that the bank will continue to hike rates with steady 50 basis points rate hikes in the coming meetings. It should be noted that Fed Chairman Jerome Powell on Tuesday practically acknowledged that the soft landing may be out of the bank's control, given that huge geopolitical events going on around the world are going to play a very important role in the economy in the next year or so. Analysts were quick to comment that a possible slowdown of China's economy, as well as the war in Ukraine, could have an adverse effect on the US economy as well. In the grand scheme of things, Powell's statement practically shows a more moderated confidence that the US economy may be able to avoid a recession in the coming months or year. Hence, market worries for a possible recession in the US economy may intensify in the coming days. As for financial releases, we would expect on Tuesday the US consumer confidence for May to gain some attention. And on Wednesday, we note the release of the ADP national employment figure for May, as well as the ISM manufacturing PMI figure for the same month. On Thursday, we get the weekly initial jobless claims figure and the factory orders growth rates for April. The highlight, though, of financial releases for the week is expected to be the US employment report for May with its NFP figure. Should the big picture of the US employment market maintain its tightness, we may see the US dollar getting some support, as it would allow the Fed to continue to tighten its monetary policy at a fast pace. The pound's gains against the US dollar seem to continue in the past few days, yet the bulls seem to be losing steam. It should be noted that the pound tended to lose some ground, as the preliminary PMI figure for May showed a slowdown of the expansion of economic activity beyond the market's expectations in the crucial services sector for the UK economy. The release tended to reignite market worries for the possibility of stagflation reigning over the UK economy and weighed on the pound, especially given BOE's intentions. On the monetary front, we note the comments made by BOE's chief economist, Hugh Pill, that the bank will have to continue to raise interest rates to curb inflationary pressures. BOE Governor Bailey also tended to reaffirm that the bank will have to proceed with more rate hikes in the coming months, yet also noted that there were factors beyond the bank's control that tended to contribute to high inflationary pressures in the economy. On a political level, we note that Johnson's government slowly but steadily seems to be getting off the hook about Partygate, given that he resisted calls for resignation after the release of the Sue Gray report about the issue. The report stated that the senior leadership at the center, both political and official, must bear responsibility for this culture. As for financial releases in the coming week, we note the release of the nationwide house prices for May, while on Wednesday we get May's final PMI figure for UK's manufacturing sector. Overall, though, we expect a rather quiet week for pound traders, with fundamentals taking the lead for the direction of the pound. JPY is stronger than the US dollar for a third week in a row, yet it remains rather stable against the GBP and the euro. On the monetary front, we highlight BOJ Governor Kuroda's comments on Thursday that the ultra-loose monetary policy must be maintained for the time being. Yet, when the right time comes, the bank is to debate on its exit strategy, and at the same time, the bank seems confident that it would be able to achieve a smooth transitioning and an exit from its ultra-loose monetary policy. Please note that BOJ Governor Kuroda stated that the BOJ can combine various means and ensure markets remain stable in executing a smooth exit from easy policy. It must add, however, that it won't be easy. The statements tended to provide some bits for the JPY at the European session of Thursday, Yet we would like to see more concrete evidence for the turn of the bank's direction before calling in the bulls for JPY. On a more fundamental level, we expect the JPY to maintain its dual role as a safe haven for international investors as well as a national currency. Hence, we may see the yen being affected and getting some support if there is wide uncertainty and cautiousness in the markets, while in the case of an improved, more risk-oriented market sentiment, we may see the yen experiencing some safe haven outflows. As for financial releases, we note on Tuesday the release of Japan's employment data, the preliminary industrial output growth rate, retail sales and housing starts all being for April, while on Wednesday we get the business capex for Q1 and the final Jibun manufacturing PMI figure for May, while on Friday the services sector's PMI figure also for May is due out. Euro is about to end the week higher against the US dollar and seems to be recovering some of prior week's drop against the GBP. On the monetary front, we would like to make a reference to ECB President Lagarde's blog post at the beginning of the week, at which the ECB President highlighted the uncertainty regarding growth for the Eurozone and also outlined the new inflation landscape. It seems that the bank's president considers leaving the current policy settings unchanged as constituting in an essence further easing, which is not currently warranted. Ms. Lagarde stated that she expects net purchases under the APP to end very early in the third quarter, highlighting gradualism, optionality and flexibility when adjusting monetary policy. The possibility for the bank to exit negative rates by the end of Q3 2022 seems to be nearing, yet the bank, as mentioned by Ms. Lagarde, is not acting in a panic mode. Overall, though, we would expect the change of approach by the bank to provide some support for the euro, while at the same time may have a detrimental effect on European stock markets. As for financial releases in the coming week, we would like to highlight the release of the preliminary HICP rates for May of Germany on Monday and France and the Eurozone on Tuesday. Should the rates accelerate further, we may see the pressure increasing on the ECB to tighten its monetary policy and vice versa. Other than that, we would also like to note the release of Germany's retail sales growth rate for April on Wednesday, as well as the final manufacturing PMI figures for May of the area. On Thursday, we get Eurozone's producer prices growth rate for April, while on Friday we note the release of May's final PMI figures for the services sector, as well as the composite readings for the area. Also on Friday, we get Germany's trade data for April and Eurozone's retail sales growth rate for the same month. AUD seems about to end the week high against the US dollar for a second time in a row. On a fundamental level, the elections in the past weekend tended to act reassuring for the markets rather than as a great shock, as described by some media outlets. The fact that Labour won seemed to have been expected by the markets, and the wide difference may have even provided some slight support for the Aussie, as it may imply some stability. Overall, voters seemed not to be so much in favour of the Labour Party, but expressed more their discontent towards prior PM Morrison's policies. Yet that is a matter for political analysts to research. On the monetary front, RBA's confidence seems to remain present and could provide some support for the AUD, given that the market expects more rate hikes to come. The draining of the market's liquidity through a non-reinvestment of the bonds bought by the bank and simply allowing them to mature could be among market participants' expectations. On the other hand, the Aussie as a commodity currency tends to remain sensitive to global growth and especially the growth of the Chinese economy, to which the Australian economy is closely linked. No surprise that Aussie traders next week are expected to keep a close eye over the release of China's manufacturing PMI figures for May. A possible raise of the indicators could mean a faster expansion of economic activity for China's manufacturing sector, thus imply higher exports of Australian raw materials to China and support the Aussie. From Australia, we highlight the release of Australia's real GDP rate for Q1 on Wednesday, and should the rate accelerate, would imply that the Australian economy grew at a faster pace, which could be a positive for AUD. Also from Australia, we note the release of May's trade data for April on Thursday, with the focus being on the trade balance. The CAD seems about to end the week a bit stronger against the US dollar, but with little gains. The main event for CAD traders in the next week is expected to be BOC's interest rate decision on Wednesday. The bank is widely expected to hike rates by 25 basis points, and currently CAD ORS imply that the market has fully priced in such a scenario. Hence, for the interest rate decision to actually provide some substantial support, the market may require something more than a mere rate hike. It should be noted that the market also has started to price in the possibility of the bank performing a 50 basis points rate hike, raising the rate from 1% directly to 1.5%, which could add bullish tendencies for the loonie. At the same time, should also the bank provide a forward guidance which would maintain a hawkish tone, it could also add further support for the CAD. Anything less than the pre-mentioned could weaken the CAD, given that the market prices in also more rate hikes to come in the following meetings. Also, as a commodity currency, the CAD may continue to be sensitive to the direction of oil prices, as the Canadian economy is a large oil producer, as well as for natural gas. Oil prices could get a boost, thus lifting also the CAD, should supply remain tight, as is expected, while China starts showing a growing appetite for oil. As for financial releases, we would highlight the release of Canada's GDP rate for Q1 on Tuesday. Should the rate accelerate beyond 6.7% quarter-on-quarter on an annualized basis, we may see the CAD gaining, as that would imply that the Canadian economy grew at a faster pace and could also reinforce the market's hawkish expectations for BOC's meeting on Wednesday. Finally, we would also like to note the release of Canada's manufacturing PMI figure for May on Wednesday, albeit it may be overshadowed by BOC's interest rate decision.
And with this, our live session for the day has come to an end. Thank you for joining. Remember to catch the next live session on Monday. Enjoy the weekend, everybody. Thank you.